It's been a very, asset management focused type of year for REITs. I think they're really looking at their properties and they're, trying to get the most out of them at this point, as opposed to looking at large scale or even smaller scale acquisition activity.
Joining me today is Ross Prindle, Managing Director, Global Practice Leader, the Real Estate Advisory Group with Kroll. Ross, thanks so much for joining us.
Great to be here.
Now that we're about a quarter of the way through 2025, how would you describe the current state of the REIT industry?
The transaction activity is significantly down still. The interest rate environment, a lot of the political and geopolitical environment has affected things quite a bit. While you have, traditionally seen a lot of transactions, a lot of activity in the REIT world, not as much. And I think folks are waiting around for a little bit more stability in the marketplace with regard to interest rates and, seeing where things are going politically as well, with all these tariffs and everything else, inflation. And I think once we get a little bit more stable, which I think we're all hopeful for a little bit later in the year, I think things will be a little bit better. But it's been a very, asset management focused type of year for REITs. I think they're really looking at their properties and they're, trying to get the most out of them at this point, as opposed to looking at large scale or even smaller scale acquisition activity.
And what has been the most surprising development that you've seen this year so far?
The most surprising development I've seen is, the surprising for me is I thought, because last year wasn't the most robust activity year either. I thought we'd be through this by now. I thought after we got through the election, we got into this year, we would start to see capital markets slow down a little bit and folks be able to have some certainty. And the most surprising thing to me is we're not there yet. And I'm hopeful to get there soon.
And as you look beyond this year, what do you think will be the major challenges and opportunities for REITs?
Since COVID, the work from home, the hybrid work situation has been difficult for, office holders. They've seen some drop in rental rates. They've seen some drop in values and occupancies down. And so that has really led to a challenge for those folks holding those type of assets. We are seeing a lot of companies that are now coming back and saying, you know what, we probably should have our workforce in the office a little bit more. So they're mandating a little bit higher activity in the office. Some of the other products, have done quite well, right? I think you've seen retail has rebounded pretty well. Industrial, while it hit its peak not long ago, is doing quite well with adjustments to market rents and rents still rising to some extent. And I think multifamily has seen there was quite a bit of construction in the multifamily area, and that started to subside a little bit too. So now you're seeing a lot of these units absorbed, which are allowing for landlords to raise rents there a little bit and do a little better there too. So there's a lot of hope in the future. I would say that the biggest thing that I think REITs can benefit from now is some more stability in the interest rate and inflation market. And as soon as we get that, I think you're going to see a more robust activity and returns that are reflective of that.